Oh, all right. Let's get into it. We've got a bit of the weekend wrap happening, and yeah, again, look, just a look at how sort of the week finished up. Sort of see if there's anything sort of developing that we can sort of spot for some trades sort of coming through the week, and yeah, just do a bit of an overall sort of view of everything, just to see if we can see if there's any sort of new correlations sort of coming up, if there's any sort of yeah, as I said, potential trades and just opportunities that we can sort of see. So look, where we at, it is 11:30 on the dot on the Sunday night. So we're at the 9th of March. So it is a father's birthday today. So happy birthday to him. All right, so let's start off with DXY. Look, it has just had an absolute pounding of a week. I mean, look, drag this one down here. Couple of things just to cap on it. I mean, at its worst, nearly 4% drop on the week. That is huge. I mean, this time last week, we were up here. Zelensky and Trump had just had that meeting. And, I mean, Zelensky was basically just arms crossed, eyes rolling, whatever, this kind of junk. And was like, oh, look, first target going to be back up here. Then we may come down here, see if we see a bounce from here, all these levels. It has just absolutely just cut through everything. A lot of this move here really is euro based in that. I'll get to that in a little bit. I mean, look, across the board, US dollar has been being sold off. Clearly, you can see this here. This is DXY on the 4 hour at the moment. But it is just sort of been absolutely crunch. I think I saw something before saying sort of euro ran 5% for the week. We're seeing 3.8% at its worst, and obviously only just managed to rally a little bit into the end of the week off the lows. And that's nearly 4% at its worst there. So it has been absolutely crunched. But, with these big, large sell downs, what you do expect to see is some sort of bounce, some sort of profit taking. So we kind of sort of think, okay, where is it going to stop? I mean, these are the price targets I had. I mean, these price targets, I've been sort of like calling this sort of US dollar sell off from back up over here. So, you know what I mean? It's not like, as you can see, the pattern that we're trying to sort of get through with all this led us to 105.80. But really, this only just stopped here for a moment and then just absolutely crunched right through it and obviously right down into this lower zone here. So where we actually bounced, and I put a post up on X as this happened, if you look at this purple line right here to the absolute cent is the gap from the election gap. Excuse me. From the election. Sorry, it's a bit late. Need to get these things done a little bit earlier. But yes, look, it came right down into this big sort of grey zone where we said, look, this is the buy zone previously. Coming back over here, this is a buy zone. If I was looking to be sort of like, US dollar sort of bullish and you're trying to sort of buy into a move, this is kind of where you would expect it to be, hence the buy zones with it all. So look, I do expect some sort of little reaction from this here. As to how far, how high, who knows? I mean, we just got to sort of see how the week sort of starts to develop. But something to this effect could definitely be what we see earlier in the week, particularly if we see this sort of like RSI here. Look, this last push down here, as you can see, it's not, I mean, it's quite a sort of where we on the 4 hour here. But this last move here, oh, just got to fix these up because these ones show on all time frames. Go back onto the 4 hours. So what I was saying is this last push down here, you can see the buying pressure is actually sort of starting to move back up out of that oversold kind of sort of area. So put this along here, which does give us a little bit of a negative divergence. And negative divergence, as you know, is probably one of my sort of favorite sort of reversals. That coming into a high time frame expected support, resistance, whatever direction you're going area, and only sort of adds to the idea that you will get a bit of profit taking and a bit of a push up. I mean, this thing's, as I said, it's come down almost sort of 4%, the better part of 4%, even where it's sort of closed. So it certainly doesn't mean, okay, bang, we've got a bottom and we're going up, but it does mean that you start to see people will take some profit. And as they take some profit, you can expect this thing to sort of rebalance and sort of push back up a little bit here. So I wouldn't be surprised if we do see a little bit of a push up through the week. So we can update this fib, come down the bottom here. And we can start to sort of think, where could we sort of see it move up? Look, realistically, it could still be in a very big, strong sell up until the 38. Look, it's not to sort of say that this thing can't sort of go further. It's just saying that sort of like in given this last little push down here, admittedly into the end of the week, and I don't really put too much credit into the end of the week with these sort of things. For the last couple of candles, not too many people are at their desks. They're taking profit, people are just sort of clearing their side of position. I mean, I took profit on a lot of my positions going into the week. Okay, I'm not moving the market, but that is the general idea with a lot of people, particularly when you've been hammering something this hard in one direction. People are going to go, well, why sort of risk having something happen over the weekend, particularly with the sort of turmoil of everything more recently. The wrong kind of headline, you could gap up here and then run, and you're giving back, all of a sudden there's 38, 50% of your position that you've just absolutely dominated through the week. So I think sort of like the last couple of hours could definitely just sort of be a little bit of that. This move back up to, say, the 38. This is an area that we got kind of marked out as a potential sort of like little bit of a resistancy area coming through here. I would say that's at least at the top side for this move here before we see a re-attack on the bottom, on the lows. That would be about the top end, I would say. So up over here. I think, look, I mean, this is the interesting thing. If we only get up to this level here, and we say get some sort of continuation of these last couple of hours here, moves up here, and then starts to drive down here. This is with the 23 into a couple of little areas that we got marked out here. Obviously, the lower the shallower the pullback, the stronger the momentum is to continue in that sort of direction. And 23.38 fib levels are perfectly fine to sort of just be a little bit of a reload. People take some profit. People sort of go, hey, let's squeeze the shorts a little bit. Let's move it back up. Let's bang and sell it down. Like this is what I say all the time. It's like if you're wanting to sell this and it's going down to our next price target, 101s, coming into this support area, I mean, this is a support area, high time frame support area. You're bound to see a reaction here regardless, as we are starting to see. As to how high this comes, well, this is the whole sort of thing, is to sort of determine, is this going to break this level this time? If we only sort of get to the 23 and then we start driving back down again, the likelihood that you go through is a lot higher. You go to the 38, likelihood is still pretty high that you'd probably move through, but you do also run the risk of, double bottoms and that. Once you start to get up to the 50 or the 61, there's always chance that this could just be a big suck in and then bang, smash through. But you do run the chance then of, the second drive, which will come, as I always sort of say, you've got your three parts. You're down, you find support. You're up, you're finding resistance. This is the third leg here. If this leg starts from up here and originates from up there and we go up to the 50 or even, go back up all the way up over here to the 60, the likelihood of getting a higher low is a little bit stronger because, the people are selling down. You got to think, if you think it's going down here, you're going to kind of sort of keep piling on with it all. If they allow the price to push up this high, it takes a big mammoth effort, a lot bigger to get back down here and then break through than it would from just this level down here. So the higher you go with the sort of retracement, as I said, 61% is a great sort of retracement level, very strong. But it also does show that, there is a little bit of an imbalance, well, not a balance, probably a bit more of a balance between the buy and the sell side. If we see that pressure applied from the sellers at this level down here, it means they're getting out at all costs as soon as they can to them because they think it's going down here. So the likelihood of this continuing and breaking is coming through here. But as you can pretty much guarantee, all right, pretty much guarantee there will be some sort of move up through this area here, and then there will be this move down here. The question is with this one here, do we get the higher low, double bottom, or do we go through for a lower low continuation and redo it all? So we're going to have to sort of wait for little bits of data to sort of see what that comes out with. Of course, we had NFP on the weekend. Well, I guess it was technically on the weekend, but it was on the Friday night there for sure. So I'll just reload these ones here. Beautiful. And this is the interesting thing with this. We had 125, which was revision down from 143, expected to tick up. Even from 143, it was expected to tick up to 159. But this was revised down. it was an increase of last month, as you can see, when even before it was revised down, but it didn't meet expectations. So as I was saying, sort of on the Friday analysis, that these kind of numbers here, you would need a 200 or so, or 180 or something like this to really get the thing sort of moving and sort of really catch a bid. The fact that unemployment rate went up as well is kind of like two ticks in those negative sort of columns for the US dollar anyway. And the idea with this being, obviously, look, if you've got an unemployment rate that's creeping up, it's not good for the economy. The flow on from this could potentially sort of lead to sort of obviously sort of a weaker GDP, and then sort of flow on and flow on. And that is kind of when people go talk about recession talks and all this kind of stuff. Higher unemployment. I mean, 4.1% is still a pretty low all over kind of unemployment, but it doesn't matter in the grand scheme of things. It's just where was it and what direction is it going in. And when you've determined that, it's like, well, what do you think the Fed are going to do? Or what does the market, more importantly, what does the market think the Fed are going to do? And that's the direction that we see. And as I've said a couple of times in the last couple of weeks, US dollar has been held up by the tariff stuff. We've seen that mostly abate itself, and that hasn't really sort of kicked on and got worse and worse. There's been bits and pieces popping up, but the economic data really isn't shining more recently with the US. And so now we're starting to see that start to flow through and obviously sort of be sold down. As I said, a lot of this move did with the DXY did come with euro strength. Euro, as I said, did about 5% or something for the week. It was just insane. But it doesn't mean that sort of like, that's the only reason it was coming down here. I'm sure if we check out the yen and the pound and a couple of these other ones that make up the DXY, we'll see similar sort of things with the US dollar being sold off across. So it wasn't just euro strength story. It was a euro strength story with US dollar being sold off, which led to such a mammoth sort of move here. So all that aside, I think sort of like, early sort of pushes up, a bit of a continuation as we kind of sort of see, from these Friday moves off the support here. Maybe this moves through here. I think, look, honestly, I would be happy to sort of give it a shot from around this 104 sort of 30s level to sort of see if they just sort of keep the foot on the neck kind of thing and sort of move this down here. I wouldn't be surprised if this kind of area ranges for a little bit before it does break through, if it's going to break through. Top side, look, I would say a retest of this level here because that's where we had that support zone through here. But really, as it actually came down here, didn't really think about it for too long. I think it sort of they stepped up. This was that support from this kind, which would have been this zone here. That was their effort, and bang, they pushed through. But certainly, I think at this point, you're going up, down, up, down. I think sort of any sort of move up here into these two zones is just going to be sold into. So don't have to be first into the trade in my opinion, but I think we could see some US dollar sort of strength early on open perhaps before we sort of start to see this sort of maybe sold down a little bit more. But I think, yeah, certainly we could see some sort of rebalancing with this move here. Should you break through 103, 103.20 or so to be precise, you are looking like a pretty nice little drop down after that. Smaller little sort of areas through here and here. We could probably pick out, maybe this would be a bit more of an area of interest. Drag this across. Obviously that little resistance going back here. This is obviously just before we had that US rate decision. 50 base point cut, remember, which did absolutely nothing for the market. And it actually sort of gave it a reason, or I don't know if it gave it a reason, but it was the turning point for it to sort of start ripping right up. So look, I do think that this could definitely sort of come down a little bit further. But if it moves up here, I'm not going to be worried. I'm just going to try and sort of sell into these sort of positions a little bit more. All right, and gold. So gold continues to hang through this zone here. So look, we had the bigger zones through here. I was like, oh look, just to consolidate through this period here. I thought we may have sort of got the break. A close above this zone is what we were looking for. This, half a buck or whatever this is here doesn't really count. Obviously, bang, knock back down. So it did have a big sort of push. Actually, had two pushes around that NFP time. So drag this along a little bit more, drag this down, and I mean, you don't really need to see the box here. You can see the two levels. This is where the buyers are. This is where the sellers are. I think a close outside this area, move it along, move it along. I think a close outside, below 94 or above 22, I think is what's going to give us the direction. This last push through here obviously sold into, but as you can see, there wasn't really a great deal of sort of buying pressure to sort of back up any sort of move higher at this point. It thought about it for a second, actually twice. I actually sort of did okay through this period here because we got that big push up at first. I think it got out at like 25 or something like this. It came all the way. I kept a third of the position in that. And of course, this is what I get for, trying to sort of hold something to break higher. Came back down to 04, got in it back in at 07, got out. Fairly small move there in the scheme of things up to this lot here. Then I had my sort of original positions. I think I got out at 29 up at the top over here. And this is the thing, sort of particularly with my style of trading, there's times where I bought gold last Friday, or 2 Fridays ago now, down in these 30s, down over here. You know what I mean? And it's like, oh, why didn't I sort of just hold that position? Would have moved all up here. So I do find that fight that little bit of FOMO as well, and just say, think, oh damn, why didn't I just hold that? Why didn't I hold that? But again, then you've got these kind of areas through here where I absolutely dominated sort of gold, and particularly even this last week got out at 29. Where we closed at 09. There's a $20 move. Saved myself any sort of drawdown, saved myself any stop outs, comes back down, and then I bought, as I said, I bought some more at 7, and it goes back up to say, a $20 move like a few hours later or an hour later. And you're like, oh, why didn't I hold that sort of bit? But the thing is, it's a plus minus game with it all. Yeah, okay, well, maybe not the minus so much of it all. I try not to be the minus, but it is that sort of thought of like, okay, I've missed that big run, but I make up for it in these kind of in, out, in, out, in, out periods. So it's just the cross that I have to bear with it all. And I go, okay, look, you know what? It would have been nice if I held that. But in this instance, I played it correctly. I got out of 29, came back down. Bang, okay, I can reload and have another go potentially. It just frees me up to be a little bit more nimble, and particularly while with this, because through, I mean, what's this? Tuesday through Friday, we were really just in a 25, really got down to 90, $30 range, and it just consolidated boom, 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 along through the side over here. So, you know what I mean, is you win some and obviously you lose some, but like you miss some of the big runners. But that's fine, you know what I mean. I go in and out, and I'm happy enough with that. And quite frankly, I think it does make up for itself anyway. I'm not really one to sort of buy and hold, and hey, it's going to the moon and that. I like to sort of pepper my entries. I like to go hard and yeah, go in and out. But anyway, enough of what I do. The chart here. So basically, as I said, look, I think another close up around this area. I do think we will get something that can actually break out. This is on the 1 hour here. So back on the 4 hour. You could see a little bit of a push down early, would go in line with that little bit of US dollar strength, maybe a little bit of a shake, take out these lows. If I can get back in sort of like around 29, I would like to sort of buy the bottom of this range to see if we can get another drive up and get a close out the top here. I am all in all thinking that, if this thing was going to go down and then up, and this is what I was covering last week, saying the direction it was in here, if they had sold it down from this point here, and I said this, that I was looking for sellers to come in above 2,900. If they were going to sort of do this, okay, we've broken this channel, sell down up here, this would technically give you a lower high and then sort of a big push. Oops, big push like sort of up. There's your high. Lower low, I guess, is very choppy through here, but really that big sell down is your new low. Up here would be your lower high. If we were to see this kind of thing, I would have wanted the sellers to really just bang, smash it down. Or the buyers to just not be there. Whatever event, whichever way you want to say it, they would have been coming for it down here. It didn't happen. Like, yes, they sold it down. Yes, they stopped out a bunch of people. Easily just bought it back up. But the buyers, they were sitting down here. And they've just moved up their bid to here. If this was going to play out and this was going to come down this way over here, you would have wanted to see a faster sort of move. Okay, here it is, boom, 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 down. The fact that the buyers are maintaining this level means that they've tried to sort of like, as the three sort of parts go, you're down, you're higher, you push down. You want to get this, but at the moment they've stuck it here. So really, the fact that they can't break it down here means the higher likelihood is it that we're going to move in this upper direction here. Till we see this side give way, and we see, okay, this is the consolidation, and then boom, a rollover. Okay, then we can be moving down. And if we do that, like, I mean, anything's possible. If we do that, then this kind of confirms, even though it's a little bit choppy around this area over here, that we could be seeing, obviously first point of call. Let's get these ones out of the way. First point of call is targeting the lows. So if we break through, say, 88, that's where you're probably kind of looking down over like this. But the fact that the buyers are holding here, yes, okay, the sellers are holding it at the top side as well. But I think the fact that it's consolidating near the highs is, people take profit. Well, there's buyers there. People take profit. There's buyers there. I don't think this is so much of a distribution pattern. I think this is just more just sort of like down, buy it up, down, buy it up. I think what we're kind of looking for is for enough stops to be put above here to really get this thing to explode back up. And I think that if this does go through and we get a close above, say, 30, to be safe, look, a 4-hour close above 30, 20, look, mid 20s, but I would say 30 to be safe. Yeah, so a close above 4-hour close above 29.30. Your first obvious point is just to go back up to 55 and test for all-time highs. But realistically, I think this is building up enough liquidity, enough sort of stops sitting up along here that this thing has the potential to go bang, bang, bang. And I think this could be our run to 3,000. Let's just see what does the price move. Oops, let me get rid of this thing. It's very close. If you put it up to a certain range here, I mean, a buck or two down there, it doesn't matter, whatever. But if we say that this is just a flag building, the measured move takes you to 29.90. If you get to 29.90, is that close enough to say, okay, we're close enough, let's just run it to 3,000, hit those mental stops, and then we dump it back down? Because remember, this was what the overall kind of sort of thought is that it could be up here. I thought this would come a bit quicker, but I guess this is still a potential sort of plan. Do we come up to this sort of 3,000 price target here, which is around, what we've got, 29.90 is the bottom of this price target that we have here as well, and that this comes into play, this large channel, which I suppose actually top end of the channel would take you a little bit higher now, but in all fairness, if it doesn't continue and sort of take out that level up the top over here, so if it does take out this level over here, you could see a bit of an overshoot. But I do think, should we sort of get back up over here, so let's continue this through a little bit further. Whoops. Excuse me. So that's your channel. To get some sort of move like this. I do think that we're going to have some incredible sort of sell-off when we do get this. And by incredible sell-off, I mean, something pretty fast and dramatic and hard. I don't think this is going to be the top that breaks it, that gets us, runs over. I just sort of think that we're going to hit a level at some point. It's going to be two screaming positions. One sort of where it's just flying to the top and hitting all stops and everything that it can in the top. And then I think equally just a big sort of sell back down. This is also based on like these moves like that we saw. This is going back of this actual channel here, but this is back in December 23. If you remember this one at all. And this was an incredible session. It was on a Monday morning. It was in Asia, as you can see. You remember these things because when you trade through them, you don't have to think or sort of try and interpret it. You remember because this was a feeling. And this ran like 50 bucks in like, look at this, 80, this 88 here up to 21.48, so 96 bucks. It did this in like 15 minutes. Like, it was just incredible. It's just like bang, 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 bang. But the point is, when you see the big move up, where's this thing here? This is the move up through that point. And yes, I'm not taking the whole sort of move. I'm just saying that one 4-hour candle So it's a 4 hour candle. So open at 2071, went to a high of 2147. If you look at just that 4 hour candle, the big wick it got on after it, and it came back down and sold to 168 before it saw a little bit of a bounce, and then obviously dribbled. Look, long story short, won't burst the ending. We did take out that eventually, but look, it took 3 months to take that back out to get back up to that top over there. So that's obviously larger than the time frame we trade. But the point is that these are the kind of tops I like to see when we okay, we've got a top and that's the big sell down afterwards. So I mean, if we look at that sell down in terms of percentages, before we saw a bit of a rally, we saw 6% directly after that in the next preceding 1, 2, 3, 4 candles. So the next 16 hours, it dropped 6% from the highs. If we look at this kind of move that I'm talking about now, potential, so you get to 3,000, that's 7%. So, albeit it's sort of like a large dollar amount, $210 drop, I mean, it's plausible that you could have something similar to this. If you do get some screaming top, that this thing could absolutely crush to the downside. And even if you match it up, say, you go, 6% or whatever that last one was, $186. You got to remember, the higher the price of the actual asset, the bigger the actual per buck dollar gold move. These things can move in those sort of set percentages. So, 6% is an incredible sell-off, but we've seen it, as I just demonstrated, we've seen it before. So it's not to sort of say that these things can't happen. And this is what I'd be probably looking for a sort of top. So I feel around this sort of 3,000 to 3,050, we're getting into an area where I would like to be sort of probably trying to get some short positions happening to sort of see if we could sort of anticipate a little bit of a sellback, and we could maybe see a 150 buck move to the downside. I mean, look, 150 buck move, if we got to 30.50, only really takes us to where we are right now. So, there's some big money to be made. Obviously, big money to be lost, but like big money to be made if you time these things right. Anyway, that's the bigger picture for it all. What I'm sort of feeling with it all, you're bouncing through here. As I said, jump back on this sort of more shorter time frame chart. I think sort of this is really sort of just coiling to build some stops up to break through the top. I don't think this is the top of gold here for now. Look, if we break underneath 80s, I'll probably play a little bit of a short side, but it'll be very quick in and out, and I'll sort of definitely be guarding myself for an idea for a reversal. Because as I've said a couple of times, Team 3000, I do think that's probably where gold is destined, 3,000 to 3,050 over the coming sort of maybe months. Weeks is with a plural there, month kind of thing, months. All right, move along. We've got silver. Silver, this one here, which are we using? Oops, maybe I've deleted a bunch. I think I might have deleted a bunch of my stuff. All right, sometimes they're just sort of like, anyway, whatever. Let's get rid of all this. Gives us a good chance to start fresh. And look, we're seeing a similar thing, but this is the inverted head and shoulders that we were playing last week. I can't believe, how did I lose these charts? Give me 2 seconds. All right, look, I'm not quite sure what I've done here. Somehow I've lost a couple of my silver charts. 1 second. Nah, they're gone. Okay, whatever. So the point is, we were looking at this, and this is what we're going to call through the week. Whoops. This inverted head and shoulders, which came through this area here. Zone. Then move up through here. Gave us a measured move. I think it was up by, well, it was up at 32.80, which of course is this move just through here. Which we saw this very close to sort of completing. I think when we get to 77. I mean, look, this is a bit of a wonky kind of neckline through here as to sort of the percent. But, the point is we got that little move up, buyers were down here, they moved up, they broke, they retested and pushed through. I think it was Thursday or so. Was it when? Yeah, Thursday. Here we go. And we see, look, it just felt like its thing was running out a bit of stuff, out a bit of steam, pulled back, reloaded, and pushed through. So what we're seeing here at the moment is obviously a little zone that the buyers are attempting to hold through here. And then we've got it capped just around that little area here. So look, it's certainly through the, if you're looking just in this little section of it here, it is bouncing up here. They've tried to push it back down. They've tried to push it back down. Buyers are still holding and holding and pushing here. I think this puts the risk similar with gold for the risk for the push out to the top side. I think gold's probably got a little bit more of an explosive sort of move in it, but once it does move, but silver is certainly coming back very strong here. I think sort of coming up into this sort of like 33.50 area is where you kind of want to see what they're actually made of. Because if you stand back like this here, it's sort of like this pullback here does make you start to think, okay, well, there was something going on here. Was it just a stop out? Was it just a run down here? Because this came down pretty hard. If we look at this last sell down here from 33, that's a 7% move over a couple of days. So they did sort of shake this pretty hard coming down over here. But as you can see, buyers took advantage and bang, snapped this back up to the top side here. So look, above 30.80, let's call this, breaking consolidation, looking a little bit higher. I think that's probably your key to sort of move through there. If you do sort of come back down underneath sort of a close under say 32.20, well, then we can start to wallow around these levels a little bit here as well. There was a little bit of a zone, obviously, that they sort of picked up over here. So you look for these ones for a retest of these two here. But the thing is, if you fail at this area here and you start to come down here, I think this is going to be a sell the rips kind of area, because this then changes the larger kind of structure of it all. You then have, whoops, this kind of thing happening. And if we drag this across, see if we can match this up with much. Not perfect. I'll see how this goes. I'll hold it just for now. But the thing is, it's sort of like basically you've got this great rally, and it's the little in the sort of smaller kind of time frame area. You've got this head and shoulders. That's pretty much played out. And if they fail to sort of actually put in a new high to at least sort of confirm this as a large zone like this. If you fail to get back up into this area over here, I think you start to break down here. You've got your high, your lower high, sorry, your high, your lower high, a third lower high. To me, that kind of confirms this whole sort of move down here. Whether this is hitting at cent to cent, who cares? The point is that that's the structure. And I think if you see this, this is what you're going to see. If you break through here, you're going to see these kind of moves. And it's going to just wallow back down over here. Doesn't mean, again, doesn't mean we're coming down over here, but we're just talking sort of like you want to see this momentum that's coming through this section here. You want to see it just sort of sideways and then continue. You don't want to see, if this fails to sort of get this continuation move, that's the bigger kind of picture that you're going to see, a kind of rollover. And then if you look inside this little structure of a rollover, you're going to see these moves here. And where people are just going to push up and they're going to sell into it. So push up and they'll sell into it, push up and they'll sell into it, till you get back to potentially these sort of higher support areas where the market and myself would feel more comfortable having another attempt to push it up along these areas like this here. So again, look, it's not really super clear cut because it is in this little sort of bounce. Is it bouncing, consolidating to continue, or is it bouncing? Whoops. Is it bouncing to just sort of, basically distribute a little bit as best it can at the top and then sort of move over here? But the point is, even if it is coming back down, the fact that it is holding up near the highs means that any sort of push down and then down and down like this, the buyers are there, they'll just sort of retreat back to these levels here and they'll give it another shot from here. If this thing was to be certainly like, okay, destined to be coming back down to 28.50s, then you would see this move down a lot quicker. There wouldn't be that sort of section of the market that's participating to buy it, to hold it up, hold it up, hold it up. If they fail to hold it here, that's fine. They'll just move back down here and they'll try and hold it up, hold it up, hold it up from down here. I don't think this is like going to see another one of these moves like this come down like this. I just don't think that's going to happen at this stage. Again, look, anything could happen, and I could definitely definitely be wrong with it all. But I think sort of certainly if we break below and close under say 32, 32.10 or so, really nice break outside this range, I think we could see a day or two of a little bit sell downs and that, some shorts till we get back down to these, bigger sort of like support areas to then potentially buy back up again a little bit more. All right, and I'll try and sort of cruise through these ones a little bit more. We had Aussie. Aussie failed. This is what I'm talking about. Stellar bounce, moved up, consolidated near the highs, broke down, and then they sold into it. Boom, they sold into it. Boom, boom. This is exactly what I'm talking about, which could potentially be what was happening with silver just then. That, we've got this little consolidation area, matched it at the previous highs. It tried to move out here, tried to get up. I mean, 63.60s, but obviously unable to hold it. As soon as you got to close outside this box, continuation, they sold into it. Doesn't mean that necessarily we're destined to come back to 62. It just sort of means that you got to respect the fact that this area tried to continue, it didn't, it failed, it came back down. Buyers are still trying to give it a shot from here, give it a shot from here. So I still think that this has got the potential to, push up a little bit higher. We got to see US dollar sort of cool off a little bit more. But one thing to note with Aussie is that, while we're seeing these other things, and this is why I say like, I mean, obviously, yes, DXY, Aussie is not part of DXY, but Aussie has not been performing the best given the amount of US dollar selling we have seen. What I mean by that is we saw a 5% move in euro. That's fine, whatever. We saw, overall with the DXY, 4% sell off through the week. Aussie at its peak got 2%, but where did it close? Closed, actually, where is the Monday? Sorry. Tuesday, 4th, Monday, yeah, from down these lows over here. Closed those lows, I'll give you that. But it closed only up 1.6%. So it just sort of means that sort of like, even though they're selling US dollar a lot, they're still not keen to buy Aussie. I mean, the flows of capital are obviously going to euro. That's what got it moving 5%. So it just means that if they're not buying Aussie in a super strong way, even when they're selling US dollar, what happens when they start to buy US dollar? Well, the Aussie's going to get probably whacked twice as hard. And the reason that Aussie's generally not probably performing so well at the moment is because the equity markets are getting absolutely tanked. Risk itself is really taking a bit of a shock at the moment. I mean, I'm just having a look at a couple of other charts at the same time, but we had, what's this, a move? We're looking at sort of 400-point move in S&P to the downside. Things are getting absolutely smacked at the moment. And Aussie doesn't like that. Aussie likes, they like a bit of sort of confidence. They love sort of, all this war stuff and that is like up in the air. Look, it feels like it's moving in that sort of right direction and that, maybe these guys are going to come to some sort of conclusion. The Middle East, I don't think the market is care. I've been very vocal about that for a long time. I just don't think the market really cares about the Middle East situation. It hasn't had any sort of desired, expected results in terms of, if you look at oil's right on a sort of support line, sort of make or break kind of levels. Gold, yes, it's up on the top side there, but I think there's a lot at play with gold. But Ukraine was bigger when that first kicked off, certainly bigger than the Middle East was after 2 weeks. And then even the more recent lots of Ukraine talk has been what's been moving the market. And this thing's been going on for 3+ years. But Middle East sort of stuff, they just don't care. I just don't think it's what moves the market. And that's what we talk about. It's not sort of about who's being decent and who cares about the situation. That's not it. What we're talking about is what's moving the markets. And I just don't think those particular headlines have been anything to sort of really get the market moving. So I think if we look for sort of, Ukraine and Putin to sort of like, sort of come to negotiations and, say, hey, if they sort of say like, okay, fine, yep, we've signed it, we've got peace, I think that'll be something that the market will appreciate. I think you'll see equities push up a little bit more. I think you'll see Aussie appreciate a little bit more. But it's just in that sort of level of uncertainty at the moment. Like it's kind of almost been dormant in the background for a long time. Now it's at the forefront again. It's starting to sort of shake the market. They're starting to pay attention to it a little bit more. So if we do see something positive with that, I think that'll be beneficial for Aussie. If we do see US dollar get a bit of a sort of catch a bid this week, I think Aussie could come down a little bit further and could retest, these low sort of 63, 62 kind of areas. I think certainly if it does come down here, I'd be happy to buy a bit more. But at the moment, if we zoom this out a little bit, like it's trying to get through, technically put in a higher high and a higher low, but it is waning a little bit. And this is what I was saying, it's exactly the same with silver. The bounce, although it was very strong, like if we look at this sort of move down here, the bounce is 78%, pretty much to the cent, and it's moved down. And this goes back actually, ties in with what I was saying on the very first chart there, that if you allow an asset, whatever it is, to bounce all the way up to 78%, it could still come back down. Yeah, by any means, anything can happen. But it's just meaning that, the market's happy to buy it a little bit more, and you're probably getting towards the end of these kind of moves. And it's not a super strong level. It's not like, people aren't like, wow, pull back to the 78%, get ready. Because the thing is, as you push back to the 78, and this is what I covered in that first chart, as you push back to the 78, you find your resistance. We're in this leg now. It doesn't mean that this has stopped here. This could come down to 62.40, but the likelihood of this coming all the way back down and then pushing through is lower. It's not that it's not there. It's just lower than had it been a situation where it rallied up to the 38. Oh, I've lost what fib on. Rallied up to this 38, and that the sellers go, yep, let's take that. That's got a lot more chance of pushing through than it does up over here at 63. So it just sort of means that, we are going to see potentially some downside, which we are actually in the middle of at the moment. This kind of sort of pullback from above, 65, 60 or whatever we said, 63, 60. But it will find some support, and then it will have a shot here. And this is when we will determine this push through here. If this push then gets sold into, then that's the time you come down. But I think we need to see this leg here before we see this leg to go down here. So if it is destined to sort of come to 62s, I think that we're going to see a little bit of a rally effort to really test to see if we're going to be putting in a bigger higher low, and this high low would then be sort of targeting these levels over here. So top side, you want to see above 63.60 to see your continuation to test these major breakout levels. Downside, we just got to wait to see what they do through the week and that with it all. But I do think we could be looking for some potential sort of pullbacks to give us a better move and a better idea, better risk reward if you come down to say the 61% here, to sort of then maybe target at least this move up over here. Whether it then comes through and breaks through, well, yeah, we'll see how it goes. We'll see what the economic data says at the time. But certainly at the moment, I think, we could be seeing, within a sort of 30-point sort of area, a little bit of a swing from these levels here. So early US dollar buying, maybe give us a little bit of a lower level, maybe test these lows over here at the 62.80s. We could probably put a little zone in here. Zone here. An early move down here, retest this area. Again, all these flows are exactly the same stuff. So as you can see through here, move down, you find support. You move up, find resistance at that previous support level. Test the lows, break through. Find support, move up, find resistance, move down. What you want to see with this move here is it not break these lows. So if you can hold 62.80, I think that's the idea, that we've built the base on the smaller structure, which then gives you pullback to then have that move there. So for me, hold 62.80s, and I think we could be sort of seeing the move back up towards, at least a test through to 63.30s or so. If it does go a little bit lower, then probably hold fire a little bit.
and sort of see what happens at maybe around this 62.50s level with another 30 points or so to the downside there. Let's try something to look a little bit cleaner there. So yeah, we break those lows there, put it down just a little bit because obviously these things love to come down, just wick out and then sort of go back up over there. But yeah, below sort of 62.80, I would be probably saying around that 65.40 level, 65.50, 65.40, whatever, before we then see a little bit of a rally attempt and potential sort of move back up towards that sort of 63.30 level. That would go in line with a little bit of US dollar buying, which would give us a little bit lower before potentially a flip around there. All right, and copper. Copper got the pullback over here. This is interesting. I put these lines in. So I was saying, look, this is where I was looking for a pullback. It came down first wick, just hit there, and actually bounced quite strong, put in a new high. But again, unable to close outside this box that we were looking at. And this is what I was saying. It's sort of like, the box is what the little consolidation. Here's your first attempt, pull back, second attempt, smack twice, bang. Actually tried to hold in to the end here and then close down. So look, I don't think this is necessarily out. I think you'd want to see it hold this little zone here. This could really just be a bigger lot of this kind of pullback to move back here, but you'd want to get back up in the range. I think if we get a bounce back up into that range, then we could say, okay, look, this is just a little bit of a sort of this kind of move back test, and then you'd be targeting, excuse me, a little bit of a move towards these highs over here. I think this is probably the idea of where we're going for this next sort of test for a breakout. I think these kind of big moves up like this are really quite telling of where it will be going, because you're seeing these little sell downs, little sell downs, little sell downs, little grind. Obviously, yes, last 4 hours here of the week sold into bang, but as we saw, that's with a little bit of US dollar sort of pairing of the shorts right off that support zone. So people are seeing a little bit of opportunity in the US dollar. I mean, again, look, you got to think it came down 4% in the week. It's come down quite considerably from its highs. If there are people out there that are dollar bulls, so there are people that are bound to be having a shot at these levels. So they got to get that capital from somewhere. And if this isn't breaking higher, well, fine, let's take money out of this. Let's have a shot at something that's at its lows to potentially ride that up before we then pump it back into these markets, which overall are sort of moving up a little bit higher. All right, and we got China just to sort of finish this off here. And this is really sort of hammering along, consolidating at the lows here. You can see that the sellers are moving down, These little zones here, as you can see, they've sort of come up, previous support, bang, it's resistance, bang, it's resistance. So I think this is really sort of pushing it quite close. Maybe one little last hurrah, as I said, with that sort of move with any sort of US dollar buying if it does come sort of through these periods. I mean, this quite sort of bought up through here, even as it was trying to sort of go down through this line here. I mean, at the low here. I mean, this is on the 4 hour, of course. Yep. I don't know what's going on with this one. This viewed on all the intervals. That's what we've got to do. Bang, now it'll work. So yeah, that's on the 4 hour. It does trying to sell down there. It did technically make that low for the sort of negative divergence, but as you can see, look, there was not anything like this in the RSI. The RSI was really screaming up. So I don't think it's quite ready to sort of break through this level here. I do think it's destined to come through here. But again, US dollar buying, I could see some of it happen earlier in the week. Potentially move back up here. And if they do step on it early, or if they step on in this larger sort of range through here and sort of keep it underneath sort of 727, I think very much the risk is for the break to the downside. And then we are targeting that large sort of rising support. But I wouldn't be surprised if we do see a little bit of a push up earlier in the week. All right, so I think that's pretty much it on the charts. Quick look at gold-silver ratio, which, again, tried a couple of times, actually put in multi-year highs in that a couple of times, failed, boom. Nice little sort of support area that it had set up here, broke through, perfect retest for it all, and bang, smacked back down. So look, it is coming into an area where we're seeing a little bit of sort of support previously. These kind of zones through here. It's not a perfect zone with this one here, so I wouldn't be overly. Actually, move this up a little bit here. So it doesn't really line up with the slot here, but it is in this kind of vicinity of it all. Regardless, I think a sort of break below here, I don't think this will really matter too much. I think if you get down underneath these lows here, you're looking for a bit of a continuation and a bit of a push down through here. So first kind of real target, I guess, like you've got this little horizontal that you've dealt with a couple of times, but more or less that's the target I'm looking for, this kind of move over to here. So this is a medium to longish term, but not super long term support, which we've seen from May 24, bang, bang. I have a feeling that we may sort of get a move down over to here. Even if this were to be breaking out right now, I think we've seen quite clearly that you are getting some selling from this area here. We move back down here, we touch this level over here, gold screams higher, hits those sort of 3,000 plus. Silver goes to say 34, 35. It bounces off here, and then we get everything crushed back down, and it runs back up over here and looks like a large large ascending triangle kind of setup. That's the kind of general idea of something that could happen. Not saying it will, but as a thought that particularly if we do see this sort of move down here, we see gold put in those 3,000 plus levels. I would be cautious to think that this thing is going to break the first time it touches it since October. I would say you definitely find some reaction here. It doesn't mean that it's necessarily going to come back up here and break out to the top side, but if you're shooting for it and you're long metals and you're sort of going down through here, this is an area that I'd be definitely looking to bank a little bit of profit as you come into this, because you definitely get a reaction from this rising support through here, in my opinion. All right, a quick look at the news coming up for the week. I think we've got a bit of US data coming out. We've got let's go through it. So we've got a little bit of PPI and CPI data on the Sunday today for sort of China. Both not super there, and again, this could probably see a little bit of a tick up. We do have daylight savings changing this week. Is that in Australia as well? I'll have to look into this. But yeah, so this is going to affect things on the times coming through this week. So I think that makes everything a little bit earlier, actually, which is good. I think there's generally a bit of a grey period where, I think half the world swaps and then, maybe a week or two later in that, the other half. So I don't think Australia is quite yet. Obviously, it would have said here, no doubt, if we were. But I think this will sort of affect things. So maybe instead of 12:30 at night for the bits of data, you're getting them out at 11:30. And then, of course, as we move through and then Australia changes as well, those bits of data will be coming out at 10:30. So it is one of the plus sides, sort of trading winter, well, those kind of more winter end side of the seasons in Australia. Anyway, on with the data, a bit of Japanese stuff coming out, nothing too major sort of early in the week. And that's actually about it. You're not really actually only two parts of that sort of coming out through Asia session and that, and then moving into Euro. Again, nothing too much. We got consumer sentiment. Okay, we got no sort of expectations for this sort of stuff. I think it's not too bad at the moment. I wouldn't be surprised if we get a bit of a tick up on this. It's something that, not a major bit of data, but could sort of hold Aussie up a little bit. Business confidence coming in at 4. Where we at these previous ones? Yeah, so it has been actually quite a big tick up sort of last month. 4 went 5 to -3. That was in December. We'll see how it goes in that. I think one to sort of watch with this, not that this is a big sort of market moving sort of thing, is how the stock markets are going. To sort of see if that is what may sort of shake people, or if the two are sort of separate from each other. I can't say directly, so I'm going to be watching that just to sort of see if there's any sort of correlations we can pick out with that. So first big bit of data really is on Wednesday or kind of Tuesday night. That's JOLTS. So the job openings over in the US. Job openings looking to sort of tick up a little bit there. So it'd be interesting that I'm not really sure how all these government things are affecting the sort of jobs over there, because you're hearing like there's going to be mass layoffs and that, and they're uncovering all these sort of hidden dodgy fees and all this kind of sort of stuff with it all. Obviously, the hiring's still quite low. 150 is not massive numbers in terms of that for the NFP. It's not too bad, but it's not your sort of 200, 250s, 300s that we've seen previously when they're sort of absolutely booming along. But obviously, sort of job openings going up, unemployment I think was going up as well. We've got unemployment claims and that. So 21 to 26, again, not massive, not with all these sort of mass numbers that they're supposedly sort of laying off. So I don't know if this is just like a non-government sort of stuff, but anyway, something to look out for. So jolts with the job openings ticking up means obviously sort of like, people more sort of advertising more jobs and that. I don't think that's obviously sort of playing into the layoffs and that of it all. I don't think they're sort of firing the people and then hiring more. But generally, sort of like, more job openings and that. Well, again, why are you hiring more people? You're hiring more people because your confidence is up, because you're doing okay. It's the opposite of sort of like, you know what I mean? Of when you're worried, when you're sort of like, oh, well, are we going to be able to pay the bills next month? Let's just see how this goes. Let's not hire so many people. Let's get through this period. When we feel more confident, then we hire more. So if this number comes in stronger and a little bit more stronger, like beats expectations, that could be something that helps the US dollar catch a little bit of a bid to go along with its sort of technical levels and that. Enough to sort of turn things around? Probably not. Particularly with CPI coming up, actually. I think this is the one that obviously is going to be what people are going to be sort of really keeping an eye on, because they've been ticking up and up, but the expectation here is actually to sort of see a bit of a leveling out. So just before I get on to that, I don't think there's anything really much in between the two, but CPI is going to be the big one on Wednesday. And as I said, this is the change with the times, 11:30. So typically, as I was saying before, you got the daylight saving coming in. So it's 11:30 instead of 12:30, which is, slightly a little bit better. So this is the first. Okay, so where we go? Going back December, they were expecting to go up. January expecting to go up. Expecting flat in February, and now they're looking to sort of tick it down a little bit. So they're looking to sort of hold around this 2.9% area. Obviously, that's where you had it in January. You thought they'd get it. Sorry, that's where they thought they'd get it in January, and they did. That's where they thought they would hold it in February. Obviously, it ticked up a little bit, and then it sort of came back down. If this comes in at 2.9, this is kind of like, okay, well, it's not sort of exactly where they want it, but it's stabilizing. So it means what they've been doing with their 50 cuts, with their 25 cuts, all these kind of things, it's helping the economy in the sense of sort of not going into recession, but at the same time, it's also not spiking inflation. And that's the big worry. That's the big fear, because everybody and their dog was sort of going, oh, look, we saw in the 1970s, look at this chart, and it's, the second wave, it was so much worse, and it went to 15%. I think it's a different time, and hopefully they learned something. I've said this along a few times through this, that hopefully they've actually learned something from those sort of previous points. But you sort of think that sort of like, if they can stabilize this thing, that alleviates the stress, the worry, and it takes the conversation away from have we cut too much? Because the thing is, if inflation keeps going up, and they're less likely to keep cutting faster. Look, they will keep cutting. They're in a cutting cycle, but it's a matter of whether they hold or cut. And if they've, air quotes, beaten inflation, or at least on top of it, and not letting it spike up, then I think you could see that to sort of sell US dollar down. So, look, as I was saying, I wouldn't be surprised if we see a little bit of a push up in the US dollar, and then maybe CPI comes in. That gives them an excuse to hammer it back down towards the lows, which sort of fits the narrative. We got CAD, 25 base point cut coming through on, again, sort of Wednesday night, Thursday morning. For these sort of guys over there. Not really too interested in CAD, to be honest. So we've got PPI. So getting back into these sort of heavier kind of news weeks and that. And if you look at these here, look, core even. The month on month, down one tick. Unemployment, slightly up. So should this all come in as itself, you got to think sort of like, again, PPI is the producer price index, so down the sort of stream, or up the stream, so to speak, of what gets down to the sort of consumer. If they're not paying more, if they're coming down, and then on top of this, you've also got unemployment sort of creeping up. Well, these two here show that inflation is not getting out of control. So cutting rates has been the technical kind of right move. And holding rates, well, we've been holding rates and unemployment's going up. That's sort of more of a cross. That's more in the direction of, okay, that kind of stuff is the cracks forming before you sort of see, recession. And these kind of numbers, it's a double pronged thing because equities hate this kind of stuff because they don't want to see recession. But at the same time, and that flows on to Aussie in terms of risk. But it doesn't, this kind of setup here, if this comes in, this number up and these numbers flat or lower, that's US dollar sell off. So something to keep in mind for it there. GDP over in the UK looking to slow down a fair bit there. Still quite low anyway, but looking to slow down. And then obviously to finish the week off, nice super late one there, 1 a.m. We've got consumer sentiment, and at this stage looking to sort of tick down a little bit there. So again, that's not overly US dollar bullish. So main sort of thing is basically just to sort of see if there's sort of like, US dollar or US sort of data continues to look a little bit weak, then I think they're more in the idea of cutting sooner rather than later. All right, that's it from me.